I think one of the backdrops to Blockspace and to what Kubi was saying at the Open is that, you fast forward 10, 20 years when AI has kind of automated much of our lives and we're just kind of getting fat, or maybe we're not getting fat anymore because medical technology has improved. But like Blockspace is really one of those like core assets, right? Like what would be potentially one of the most valuable assets in that era? And we think Blockspace will really be one of those true things that will, if the future is going to run in these permissionless environments, well, Blockspace is that asset, the most valuable asset. And so how can we create a bit of a market structure around that instrument and set the foundation for it today? So really excited to kind of kick this off with the different sides of the ecosystem, as Kubi was mentioning, from the physical delivery and the order flow on the building side to the validator who's providing that block space to to the trading houses who actually need that order flow and are actually like large payers of block space. I structured my presentation largely around just a bit of a status update. I think maybe half of the folks here may have been around for ETH Denver, but broadly, I think a bunch of us had been at one part of the the sequencing and pre-conf community and conversations. Many of us were also in Thailand for DevCon last year, so it's a bit of an update in general. And I was just going to frame it like one of those calls that we would have every month type of thing. So yeah, and then a bit of a nice treat at the end. So just I'll start off with a quick recap of ETH Gas. And so it's a Blockspace futures marketplace. And so what we have here is effectively like a whole. So we know the next 64 validators, and we can basically go to them and say hey guys, why don't you sell your block space in advance? Now, there's different types of block space that you can sell, but the most simple instrument actually is just the entire block itself. With the entire block, you can hypothetically break it down into kind of constituent parts, be it inclusion pre-confirmations, which is just a slice of block space. You could structure execution pre-confirmations, which have state guarantees. There's a whole kind of roster of different things that a block could be split into, but we thought we would start with just the entire block itself, see where kind of the industry evolves, see what people want, most importantly, see kind of what traders want and what the demand side, see what the users want for the blockchain. And so that's the whole block market. Then we have inclusion pre-confirmations here. This is just a screenshot from our testnet. But what you'd be willing to pay for the entire block on a per unit of gas basis would be much higher than what you'd be willing to pay for just a slice of block space somewhere in the middle. And we can dive into this later if you guys would like. Now, with respect to purchasing the whole block, there's a few things that you could do. So if I am a searcher or trader, well, let me start on the more basic side. If I'm a wallet or more retail-oriented, I just want to guarantee that I'm in the next slot. That's it, right? So if that's all I want, it's an inclusion pre-confirmation. You don't need to know where you're going in that block, be it the top, bottom, or middle, so long as you're included in that block. But if you're going to buy the entire block, what are the choices that you have once you've acquired that block space? And so the first thing is you could just sell it, right? So it's like an empty barrel of gas. So you can buy that block space, buy that barrel, sell it 2 seconds later. We have a reasonably low latency exchange, kind of 3 milliseconds co-located. Not that we need that yet, but yeah, you can sell it. Now, the second part is you can actually build the block. So as time rolls down from somewhere within that second epoch to now, somebody has to build that block. Now, that could be you, right? Maybe you have your own order flow. You're a big trading house with your own desk, your own client order flow. You could build it yourself, but and that's your prerogative. Now, chances are you're probably not as big as Kubi and Titan, and so in that case, you'd say, well, I really just want to secure the top of block, right? So I'm going to do some type of trade. Maybe this is like a SexDex trade or some type of MEV, whatever it might be. So you can secure basically the top of the block, which is the juiciest part of the block, and say, hey, I want to delegate the rest of the block to Titan to just fill the rest of it and kind of maximize that value of the block. Now, you could also do nothing if you want, right? For whatever reason, if that's what you want, you could do nothing. And I covered kind of number 5, selling off pieces of Blockspace. I wonder if we can maybe twist this a little later, actually. Okay, so what's new? Well, we're on mainnet. And so since that time, we have about 24 validators and operators engaged in some shape or form. We have a bit less than 1% of the network on board, and but we have 5 operators. And so these 5 operators, they run maybe, I think, 11, 12% of the network in total. So we're just getting started. In terms of the returns to validators, it depends how you look at it. If execution layer rewards are maybe 20, 25 basis points, we're looking at somewhere between 6 and 8 basis points above that, 25% above kind of execution layer. We're just getting started, and so the ability to provide that, I guess, premium to validators, really, so long as we can break even at kind of this threshold, it's game changing for us. And as we grow and get kind of this network effect increasing, then we'll expect these execution layer rewards to increase and the demand for Blockspace to increase accordingly. Importantly, we have about a dozen other operators that are prepping to go live on mainnet. That should bring us to kind of 5-10% sometime in the near future. And there's a broad spectrum of validators, which I'll kind of get into in a little bit. But we've had to work through some DVT stuff, in particular with SSV, which I'll also chat a little bit about. And then among the other kind of operators / validators, there's a bunch who are in just like, we just don't have the capacity right now. Like, let us know when it's up and running, and we'll just kind of make it happen. So a bunch of others there. But collectively, between the live and the soon kind of cohort, that's a bit more than a third of the network who is already like aware of and kind of ready to go live with this. And that excludes Lido, which is there as well. So that brings us to maybe 62%. So as a marketplace, we're moving forward, and things are working out pretty well. On the, actually, any validators here at the moment? Hands up. Okay. All right. Okay. Well, a couple things. So depending on the client you're using, we're having some insights, I guess, in terms of like what works and what doesn't. And so, whether you're on Teku or Lighthouse, timing games are, there's like a price to timing games, which I think we all know about, but it's a little bit of it's a bit of an afterthought in some sense, that like the more you can delay a block, the more value accrues to it. In the context of what we're doing, there's someone who's physically paying up front, but that person almost wants to know how much delay or how much timing is involved there. And I'll touch on this in a little bit. So DVT, we now have full SSV support. So whether you are operating kind of all 4 clusters, I think within the whatever it's called on DVT, or just one, we can offer full support there. We've started OBOL support as well. On the relay side, we run into situations where validators will connect to our exchange, but then they'll still connect to our relay, but they'll still listen for and fetch blocks from other relays, which conflicts with what we're doing. So it's a bit of a learning process to educate the validators to know how to work with us. I have this thing I just put as ghost validators. We have some random validators who are connected to us. We don't know who they are, and that's great. But if you do know who they are, or if they ever see this video, let them know that they should connect not just to our relay, but the exchange as well, because they're not actually selling their block space, although they're still fetching our blocks. So anyway, some teething issues. We'll get through these very, very shortly. Trading firms, about 15 plus engaged there. We have 3 of them who are bidding for blocks. We have a session this afternoon with, who's there? Yeah, Toka is there, Vincent, Salini, Pavel from P2P on the validator side. And there's like maybe 3 others who will be here as well, but they were too shy to get up on stage. And we'll figure out why potentially during that panel. But one of the things that's happening is that, the blocks are being bought, and the hope is that they'll be subsequently traded on the exchange, because The trading premiums will help to bring around price discovery. The revenue from that we actually pass back to the validator, so the validators are able to kind of capture or crystallize volatility. But what we're finding is that some of these blocks will trade in the last kind of, as they roll down into like 2 or 3 slots away. It's really, when it's 64 slots out, you can't really forecast potentially how much volatility or how prices will evolve, but as it rolls down, if it's quite a volatile time, then whoever is basically like buying up these blocks, a slot or two ahead of time and then holding on to it. Some recurring narratives, basically, Ethereum L1 has been difficult or uncompetitive. We'll find out more this afternoon, but there's a bunch of folks who basically were on L1 who moved to L2 because of the environment, and they're looking to get back on L1. Okay. No, these would be like hedge funds, maybe hedge funds or like MEV or searchers. Yeah. Okay. Builders. There's a few builders. I won't say who, but one of them might be here, and there's a couple others in kind of wait and see or maybe doing other things. Yeah. Okay. Other enhancements. One of the questions is how do you price Blockspace? And so we thought we'd make kind of the execution layer rewards a little bit more transparent. And so we've built this dashboard that basically shows it in real time, basically like execution layer rewards on, well, base fee, validator recipient fees. I like to think in US dollars. Thinking in Gwei is a little bit difficult just mentally when I kind of look at these things. So having a US dollar tracker here as well as in respect of L2s and base rollups, like how much do these contribute to the validator in terms of revenue? And so currently the L2s contribute about like 1% of fees relatively to the L1 validators. Relays, we had one relay earlier, now we have 3. So we're putting a lot of emphasis in terms of how do we enable the validators to kind of maximize the value of that block. So before we were pessimistic, now we are optimistic. That saves a little bit of time there. Would love to figure out how we can work with third-party relays. So if anyone here operates a relay, would love to sit down and just see how we can make that happen as well. Validator latency. So originally, the validators would basically fetch these blocks at time equals 0. So basically like at the end of that 12-second slot. But we know already that the blocks increase, I don't know if the word's exponentially, but they increase significantly as you get from t equals 1, 2 to maybe trickle off 2.5, 3-ish. There's a handful of very sophisticated validators and a bunch who just have no interest or capacity. So we're looking to see how we can kind of educate and co-locate with some of these validators as well. Yeah, kind of more of the same. Validators basically would, builders would submit it t equals 0. Yeah. So one of the questions was that if I'm buying a block from this operator who's very slow or who's proposing a block at t equals 1 versus a validator or an operator who's proposing, at like t equals 2 or t equals 3, should we introduce the concept of like latency and make that kind of transparent to the block buyer? And it's increasingly turning into like a yes, you should make that transparent, because if a like 1 second versus 2 second has a significant difference. And so anyway, we'll be doing that as well. So basically tracking validator latency or operator latency. Collateral is something that we conceptually, it's there to support the contract that's in place, kind of buying the block space. It's a lot to think about for many people, at least on day one here. So there's 2 parts to this. One is that between the operator that's running the infra and the validator themselves, who should be providing collateral? And the discussions have basically gone towards the operator themselves providing the collateral, because they actually run the infrastructure, whereas the validator's not really plugged into it. They don't really have a say. And so, but what that means is that there's typically an agreement between the validator and the operators, so they should really be kind of updating that contract to be able to account for collateral. So that's new in terms of like legal agreements and stuff that they need to work with. The other thing is this like forgiveness period. We need to figure it out whether we subsidize it ourselves. But when an operator goes live, there's configuration issues. You know, maybe they're listening to both relays or some other thing, or just things break in the first kind of week or so. But after that, it's kind of smooth sailing. And so we need to figure out how we work at this kind of onset or within this forgiveness period. As it relates to relays and having optimistic relays, it just opens up the discussion around builder collateral. There's a bit of a framework already in place between builders and relays, so we'll probably emulate that. But again, we also want to work with other relays, and that's a different type of collateral arrangement with the relays themselves. And so we'll work to figure these out as well. On delegating a block. So you've bought a block, and before you'd have to build it yourself or delegate to like a single builder. Now you can actually delegate to multiple builders. So I could take this block and say, I want to delegate to this guy, or just to any of these 3 or 4 other parties, and I'll just take the best one, whoever's going to pay me the most. So that kind of emulates that MEV boost process where maybe I'll take top of block, but I'm going to almost MEV boost it for the rest. And that's what we basically emulated here. OFAC has come up. It's kind of annoying to deal with, but diversity of validators is a good thing. So yeah, we've had to work through some of these issues where basically the validators can only sell Blockspace to whitelisted or OFAC compliant buyers as well as builders. So we're trying to figure this out currently, but if anyone has any bright ideas, let us know. So we're a protocol that eventually will have a token. And within the gas space, you have kind of 2 different worlds. You have this infrastructure world where we're trading block space, but then you have the retail side where I'm just like hitting a button on my MetaMask, right, and getting the pop-ups and approving transactions. And so the frustration of gas, there's the institutional side as well as a retail. On the retail side, we're basically working on this initiative to just remove gas altogether. And we haven't spoken publicly about this. This is, I think, maybe the first time. But the idea is that, like, with whatever protocol you're engaging with, there's some kind of fixed set of transaction fees, either on a per transaction basis, or maybe it's like a yield or a carry type of fee. But there's some variable amount of gas fees. But the goal is to just kind of fix these all together. And the backdrop is that, today when you buy a coffee, for example, it costs, I don't know, like $5, whatever. Probably costs more. But it costs $5, but it's not like there's this variable fee that I pay on top based on the price of electricity or gas on that very day, right? And so from a retail perspective, how can we like relegate these input costs, these industrial input costs somewhere to the background? And so we've kicked off this initiative, well, not kicked off publicly, but we've spoken with a bunch of kind of tier 1 protocols to basically rebate gas. And so this would apply across all kind of protocols on Ethereum as well as the L2s as well. But what would happen is that we go to the protocol and say, your users are spending $100,000 on gas. They're going to rebate that to us, and then users can kind of claim back that gas fee at the end of the month. And the users can claim it back from multiple protocols, and so it's quite gas efficient in this process. We have a fully self-serve kind of portal for like a protocol admin to estimate the gas spend, to look at the functions, function calls, and contracts, and see like what is the gas spend per function or basically per function that I have. What do I want to rebate? But we have with the protocols we have on board, we'll be launching this shortly. They have about 12 million followers altogether, and so the point is that we're hoping that by the end of the year, we can actually be working with a lot of the tier 1 protocols to really just remove gas from that experience. And so the goal will be to ultimately kind of put pressure on the protocols as well as the developer community to figure out how can we through account abstraction and other means, just continue to kind of relegate gas into the background. Okay, so what we're doing is a follow-up to basically scalability, right? Like, how can we provide, instant confirmations for either users or for L2s or really anyone? How can we build a kind of a market structure around Blockspace? And so, in terms of like what we're building, I guess we're asking for just broader support in terms of like where does it mean to you at some point to kind of work with us in some capacity? And so, if supporting inclusion pre-confirmations and atomic composability is enough, then that's great. If you are a operator or validator, well, we're now at a phase where we can pay increased yields to operators and validators, and we're scaling quickly. To the builders, enhanced order flow. To traders, it's just precise order execution. But more importantly, we're allocating $30 million to onboard validators, operators, traders, kind of everyone across the ecosystem. And so this is starting very shortly. And that's, thank you. And that's basically it. Keen to test with some L2s for some, a lot of interest in kind of cross-chain trading. There's a panel this afternoon, which I think Toka is running with. But yeah, would love to kind of figure out how we could integrate more closely with some of the L2s, in particular the base rollups. We're hiring, and we'll see you guys at Token 2049 Singapore as well as DevConnect. So thank you. And next up, 5 minutes? Okay. I can take questions for a few minutes. The fellow with the hat in the back.
On one side, the trading, the turnover of the block space, it was like 0.3 to 0.4. Do you know why people are trading their block space once they buy it?
I think it's just different people. So there's one person who's just buying it for the sake of buying it, but then that person's not a trader. And then I think what's happening is that the traders are thinking, well, the price is this, but the market has changed since then, so there's just this gap, right? So for whoever bought that block space, they're not in touch with what is the current environment, what's the current market. So it's basically the traders or those who are more aware who are coming in and saying like, well, hey, the price has moved up, I'm going to buy it. And so I think that's what's happening. So as we get more traders on board, I think it'll start at buying at the second block and the third block. They'll eventually be able to forecast to be potentially a little bit better, and hopefully it'll turn over a little bit more.
And how do you guys estimate like the collateral for validators, and how would this work if it will work for non-sophisticated validators? Like, is it like sometimes restaking could be done, or it's a much higher collateral needed?
Sure. So there's two ways to this. So one is how to provide collateral, and the second part is how much collateral. So in terms of the how to provide collateral, you could just directly just transfer ETH in as collateral, and that could be kind of any amount. Separately, you could restake it through the restaking gas. So we're almost there with Eigenlayer to be able to restake there, and we'll look at some other ones as well on that front. In terms of how much collateral, there's a lot of discussion around this, and in the absence of coming up with something arbitrary, we figured we should make it market driven. And so what that means is basically like validators can post, or operators now, they can post any amount of collateral. But whether that's 1 ETH, 10 ETH, or 100 ETH, theoretically, the amount of collateral they post should be linked to the amount that people should, the more collateral they post, the more people will be willing to pay for that commitment. And so we should see a positive correlation between the two. But the market as a whole, I think, has not developed enough to be able to price this in any kind of certainty. But yeah, so broadly speaking, we basically say if you're going to post collateral, put 1 ETH, just as like an arbitrary number. But there's no limit. It's basically flexible within the module.
I was just wondering if you could talk a little bit about how, when the slot actually arrives for the future of the soul, how the signature of the proposer gets kind of signed over the actual block contents, because even if you did sell the block ahead of time, you still do need the proposer's signature over it to gossip it. So I'm just curious kind of how the flow plays out.
validator will first sign a BOS signature to signal they join our exchange, and then they will connect to exclusively to our relay. And whenever the slot is that validated, they have to get the block from our relay. So currently they don't sign a special signature on this block. It's just a normal signature that they sign on a beacon tree.
Okay, and that first signature is the thing that the collateral backs. Like the way you ensure that they don't renege on that promise is through the initial collateral, right?
Yes, we post collateral. Currently we post it to our collateral contract. And they will also sign a BOS signature to signal they want to join our exchange.